Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock. With news, the Fed boss said the regulator can move faster, unwinding its stimulus. In congressional testimony today, the head of the US Fed acknowledged the downside risks of Omicron and increased uncertainties for inflation. He also suggested that higher inflation justifies a faster unwinding of QE. Markets reacted by seeing a higher and earlier chance of interest rate rises from the Fed and have re-rated pricing risks. Commodities and bond yields and equities are all falling, and quite sharply, as a risk-off tone sweeps over markets. The widely watched Conference Board Consumer Sentiment Survey is reporting a slippage in the US, more than the expected hold, and it is being attributed to the bite of inflation. A fall at this time is magnified because it's in the heart of the holiday retail season. Meanwhile, Canada reported a better-than-expected third quarter GDP economic expansion. This was underpinned by good household spending and exports. However, China's official November PMIs were reported late yesterday, and they are stuck in neither an expansion nor contraction in their manufacturing sector. Their services sector is still expanding, but it was tamer than the October level. Both sectors are extending the downward trend that began a year ago. Their export sector may suffer for a while longer yet, as strict crew quarantines at Chinese ports is keeping ships away, and that won't help the global supply chain issues either. And India reported third quarter GDP data, and it was a strong recovery, but not the broad-based one they were expecting. The growth disappointing in some key components such as the non-financial and non-public services and manufacturing. They may struggle from here unless these sectors pick up. And the Eurozone CPI hit a 4.9% CPI rate in November and a sharp jump from the 4.1% rate in October. This was driven by Germany and energy costs and was high enough to make it a 30-year high. This higher rate will put pressure on the ECB to start its QE unwinding and even possibly raise rates. The US Treasury 10-year yield opens today at 1.45% and 6 basis points lower from this time yesterday. And the price of gold will start today at $1,774 an ounce and $11 lower than this time yesterday and falling. And oil prices have fallen very sharply today, down 9% or $6.50 a barrel to be just under $64.50 a barrel in the US, while the international Brent price is now just over $67.50 a barrel. And the Kiwi dollar opens today soft again, but unchanged at just under 67.9 US cents and again a one-year low. Against the Australian dollar, we've recovered by half a cent to 95.9 Australian cents, and against the euro, we're a tad lower at 60.2 euro cents. That means our trade-weighted index starts today at 72.7 and its lowest since September. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.